Okay, you're welcome again as we continue studying smart money concepts. On this particular episode, it's very important. The question people ask is when to trade. Then, under this when to trade, I'll be talking about trade timing and how to overcome FOMO. Alright, so when we get there, you understand them one by one. The first one we'll tackle now is when to trade. That's the question many people ask. No matter the concept you are trading, whether smart money concept, price action, this or that, people always want to know when to trade. Okay, so first, we need to remember trading sessions as I've done in previous videos. As recommended, London and New York sessions are the best time to place trade. Why? Because it gives high probability due to volume. They normally trade high volume there, and then it has more participants. The big banks, people that have big money to make volume available for price to move rapidly. Those are the people that are usually participating in the London and New York trading session. Okay, so as you adapt to using the 4-hour and the daily time frame respectively for major structure mapping. When we want to mark structure just like this NAS 100 that is here, we usually mark it on 4-hour time on daily time frame, and then I use another app, another trading view to check the 4-hour time frame also. Those are the markings, the market structure marking on the daily time frame and also on the 4-hour time frame respectively. Now I want to try to understand when we should be trading. There are some things we need to put into consideration. Let's take a look at the calendar. Okay, how many months are in a year? We have 12 months. How many days in a year? We have 365 days. Sometimes it may be up to that or not, but we are just using standard or average timing. Okay, so how many days in a month? We have 30 on average. Some days are 29, like February, 29 days. Some days are 30, some are 31. So let's just decide to use 30. How many weeks in a month? We have 4 weeks on average also. Then how many days in a week? We have 7 days. How many trading days in a week? Trading mostly take place, especially forex, it's just from Monday to Friday. Saturday, Sundays are just holidays. So Monday to Friday is 5. We have 5 trading days. Okay, so how many trading days in a month? Since we have 5 trading days in a week, and we have 4 weeks in a month, by the time you use 5 times 4, we're going to have 20. So out of the 30 days that is in a week, we only have 20 trading days. I hope you are getting it. We only have 20 trading days in a month. The other days in the month are just for holidays. Okay, what I'm saying is all these things are on average. Sometimes maybe 21 days if the month is 31. Sometimes it may be even less, especially February if the month is 29, so on and so forth. Okay, so how many trading days we now have in a year when we use the trading days, not just the total days in a year? So we know that total days in a year is 365 days, but how many days that are made for trading do we have on average? Also, it may be less, it may be more, but on average we have trading days in a month to be 20. So, and there are 12 months in a week. So therefore, if we use the 12 times 20, making it, we have 240 days. So therefore, there are 240 trading days in a year. Hope you are following. So you have to watch the video over and over again to get the scope of what I'm driving at. Okay, so let's calculate for the 4-hour time frame. What to have calculated, the first one is for the daily time frame, the day. So now we are in the 4-hour time frame. Let's calculate the number of days, the number of 4-hour time frame we have. So how many 4 hours are in a day? How many hours in a day? The first thing we need to know, because we need to know how many hours are in a day before we know how many 4 hours are there by segment. Okay, so in a day we have 24 hours. Then by the time we use the 24 hours to divide the 4 hours, we'll arrive at 6. Thus, there are 6 4 hours in a day. Hope you are getting it. The reason why we are considering the 4 hour, because we use the daily time frame as our higher time frame. We also use the 4-hour time frame as our higher time frame. Okay, so with this, we want to check the 2 time frame and be able to know when we should be trading in the day. Okay, so with this, there are 4 hours in a day. Then in a week with 5 trading days, that's we now have 6 times 5. Okay, hope I'm correct. Sorry, since Thursday I have 4 hours in a day, but in a week we have 5 trading days. So we have 5 trading days. So therefore, how many 4 hours do we now have in a week? So we have 5 times 6. That is why we arrive at 34 hours in a week of 5 trading days. Hope it's not confusing. Since we have 5 trading days, and in a day we only have 6 hours, 6 times of 4 hours, which is 4 hour, 4 hour, 4 hour into 6 places. That is the number of 4 hours we have in a day, 6. Then in a month, in a week, since we only have 5 trading days, so now use that 5 to times the number of 4 hours we have, which is 6. So making it 6 times 5, that is 30. Okay, so going back to the trading sessions, we know that from London to New York session open and closing respectively, it's usually from 8 or 9 a.m. to 12 p.m. That is Nigeria time, and then 1 p.m. to 6 p.m. Nigeria time respectively. Okay, so our indicator can show us all those things. We don't have to cram it on the air, but we just need to know this particular aspect as we want to know when we should be trading. So we should be checking on our chart before the London session opens. That's before around 7 or 8. We'll place it there, then we'll check by 12, then we'll check by 4, and then we'll check maybe by 6 o'clock when the session will be closing. When New York session will be closing 6 o'clock or by 8 o'clock, if we want to be doing 4 hours intervals. Okay, so therefore I will suggest you only have to check your chart for markup and placing trade 3 or 4 times in a day. How do I arrive at this? Because what I do is to set an alarm to trade for each 4 hours intervals. Okay, so these 4 hours intervals from 8 o'clock to 12 is 4 hours, from 12 to 4 is 4 hours, then from 4 to 8 p.m. is also 4 hours respectively. Okay, so most time, due to busy schedule, I may not be able to check some of the time for the day. Following days, I can check or anytime. What I'm trying to say here is that maybe I'm busy, or in one circumstance or the other I may not be able to check on the chart. I can check on the chart the following days, or any time of the day that I know that okay, I'm available to check chart now. I can check the chart by then. It may not be 8 o'clock, it may not be 12, it may be 1, it may be 2, it may be 3. Any of those time I'm available, I can check it. But the most recommended timing to check your chart, according to my Nigeria timing, is this: 8 o'clock in the morning. You check the daily time frame. So 8 o'clock in the morning. By 8, you check the daily time frame for the 30 pairs. You check the 4-hour time frame for the 30 pairs, and mark out your structures. You are looking for the structure that will meet your entry criteria. If you don't see, no problem, just mark it down. Then 12 o'clock again, you check them. You check the daily and 4-hour time frame. By 4 p.m. also, you check the daily and 4-hour time frame. By 6 p.m. or 8 p.m. you check the daily and 4-hour time frame. Or any time you have that you are available to check the chart, you can check the chart. And when you are checking the chart, check these 2 higher time frame. Check the daily time frame, check the 4-hour time frame of each of those pairs to look for your entry criteria. Okay, this is called how to overcome FOMO. What is FOMO? It is called fear of missing out. Okay, now I've explained everything here. Probably when you check the charts, you are not seeing setups that meet your entry criteria. You may be seeing other people showing off their winnings, this or that. Do not worry, because people want to show off. Okay, I just made $10,000, I just made $5,000, I just made this, I just made that. And you may want to say, oh, let me just try to follow them up. All those type of things. It's called fear of missing out. You don't want to miss out on those type of big money, all of that. But when you check your chart, you have not seen your setup. And one thing in this trading is all about being patient. Having that patience to wait for your setup, and then when it happens, you take it. It's just like an hunter. When an hunter is looking for meat in the bush, you have to set the trap, be patient for it, and then you take it. But if you are not patient, maybe the rat is coming to the trap, and then you are shaking branch of the tree, the rat will notice that somebody is there, and then the rat will just run away. By that, you have already missed out on the potential of having a great hunt for the day. All right, so what I'm trying to say is you have to exercise that patience. And how do you overcome FOMO? There's a particular principle I try to apply, and it's very helpful. That's why I recommend to check the daily time frame, hour time frame, and 4-hour time frame respectively for a whole 30 plus pairs. So you are not just checking one pairs, you are checking this, that are those intervals of the day, 4 hours interval. 3 times in a day, you just check the whole 30 pairs. You check daily time frame, you check the 4-hour time frame, and then you see good results. So like I said before, if you set a weekly target to have at least 3 trades, you may even have more than that, or you may even have less, or you may not have any trade. But let's assume you have 3 trades, and we know that okay, your risk to reward is just 1:5. You know, you risk $1, you get $5. You risk $10, you get $50. $1,000 to get $5,000. 10,000 to get 50,000. 100,000 to get that should be 500,000 if I'm correct. Okay, so and so forth. So let's do the maths or calculations using the higher time frame. If you are using the higher time frame, what are the total number of pairs? You are looking at 30 pairs. Then what are the total trading days in a week? Is just 5. So therefore, when you multiply 5 times 30, meaning that you have 150. So that simply means you would have checked the 30 pairs for 150 times in a week. You can use chat GPT or Google to find the probability of what I'm trying to talk about seeing here, of seeing 3 setups occurring in 150 times of checking. Okay, a whole week, you will see that you having 3 setups will be very easy. If you just say, okay, all I need is just 3 setups, so you are checking them, checking. That's what professional traders do. They check all those, all those hedge funds, all those, they check all the pairs. The one that meet their criteria, they follow it accordingly and play their trade. Okay, that's probably to the best of my knowledge right now. Okay, so but I think this is the best thing to do. So if you are using the 4-hour criteria, using the 4-hour higher time frame, total pairs is how many? Total pairs is 30, and we know that there are 6 4 hours in a day, and trading days in a week is 5. Let's use only 3 times of the 4 hour of checking the chart daily, meaning that you are just checking the chart 3 times in a day, each 4-hour interval. Check it by 8 o'clock, check it by 12, check it by 4, check it by 8 again in the evening. So with that, what do we have here? So total times of checking chart in a day for 30 pairs using 3 times of checking the chart by 4-hour intervals. What do we have? We now have 3 times we are checking the chart for 30 pairs. 3 times 30, meaning that we will be checking those pairs 90 times in a day by just checking by 3 times interval. What I mean, you check 4-hour time, another 4-hour time you check, another 4-hour time you check it. You would have checked all those pairs, 30 pairs by 90 times. Okay? Okay, that is my 12 o'clock alarm that I just rung right now. So after doing all that, what do you do now? So total times of checking chart in a day for 30 pairs using 3 times of 4-hour intervals would have been what? Would have been 90 times in a day. So how many do you now need in a week? For a week, that would be 90 times 5. As there are 5 trading days, so now 450 times weekly. When you have 450 times weekly, this also means that you would have checked those 30 pairs for 450 times in a week. And 450 times in a week, if you use Google Charts, Google or GPT to find the probability of seeing 3 setups occurring in 450 times of checking, you will see the results, the probability you might have. Okay, so not to keep the video long, probably as time goes on, we'll talk more on this to refine it to everyone's understanding. So what I would suggest is study the video very well, watch over again to get the logic behind it. You'll see that you have nothing to fear because you must see your setup in a week. If not in a particular day, but in that week or the following week, you must see the setup and you tag along accordingly. All right, thank you.